Okay, as always we start with silver, so let's start with silver again. Now, I made a bit of money this week shorting the S&P. Well, actually, let's start with the S&P because I'm really pleased with that. You'll remember last week I said anything under 47.18 for me was a short indication, and it certainly was. I was certainly right about that. You can see there's my level for 47.18. We did the spike up through it, up to 47.45. So another 27 points or so. And then we've had a 1, 2, 3, it looks like, down from that level. It looks better closer up. There we go. 1, 2, 3. 1, 2, 3, 4, 5. I don't know. But, and combined with the breadth charts, the ratio charts and whatnot from last week, calling it short works out really well. And I've taken my S&P profits and ploughed them back into silver and gold longs. I suspect we're going to get, well, a bounce. The start of next week. I think stocks might be in trouble. Well, we'll review all that. We'll review all that in a second. So daily. Yeah. Of course, it looks ugly. We've just had one candle down to the bottom of the local range, and then a thrusting candle down into this congestion zone here back at the end of October. We're more oversold on RSI here than we were in the second trading week, I suppose, of October. Every time I put these things on, they never work for. They never stay where they're meant to. Whenever I put fib retracements on the price volume trend indicator, they always end up moving around and switching position slightly. But it doesn't look good, does it? It doesn't look good. When we combine that with the our internals and things like that, bullish percent index, you know, a week ago I was saying it doesn't look good. Let's see, so Friday, Thursday, Wednesday. Was that last Friday? Maybe it's not updated. Thursday off. Wednesday, Tuesday, Monday. Oh no, I kind of get the feeling that was this one here, certainly this candle here. There we go, 19th, 22nd. There we go. So that was last Friday, and I said, look, that's not looking good. That's not looking good, and it's followed through. It's followed through. Naiad, again we had the topping area here in price, rapidly deteriorating on the Naiad. And again, if we go back to the 22nd, that's where we were last Friday. Naiad looks abysmal. Let's extend this further back. Let's get 2 years worth of data on here. That's a long-term deterioration. Look at that. Before the COVID crash. Ah, the good old days. At this point here, I had £176 in my trading account. At this point here, I had 3,100 and something pounds in my trading account. And that was the year I nearly made it. And I sold all the way up here and got wrecked. And I kept trying to short the S&P. Oh, here's the S&P. Here we go. Yeah. I was wrecked about here on the bounce from 2,200 to 3,200. excuse me, 1,000-point move. Yeah, Karoo, wreck me. And then I stopped trying to short the SP in late November. So of course when I stopped trying to short it, it just sort of goes flat for a bit. And then of course it was off to the races. I'm not going to say because, gee, it's like a positive reversal. Look, we're higher on price, we're lower on the indicator. But because of this long-term deterioration, this long-term divergence, and you know, this is the percent of stocks over the 50. Well, this is an extreme measure here. Very extreme. So this is making me think there might be a bounce on the Rhina. It's comparably extreme to the lows put in at the lows of the COVID crash. It's of a comparable degree of extremity. So it'd be a shame if that was an indication the whole thing was over on this little teeny drop. Or hopefully it means just a bounce and we can sell some more. There's another view. What I've done here is I've rejigged an ease of movement, so that the actual ease of movement is a 1 period, but I'm going to make it invisible. And then what I'm going to have is the 5 period of the 1 period simple, showing as like the primary indicator. It's quite a noisome thing, to be honest. You certainly can't use it on its own, just because of the way look at the way it's shooting up and down. And you know, even what price is doing, like here, it's just a straightforward up move in price, but this goes, it's ricocheting around all over the place. So it's only really good for use at confluence, but you do get some interesting divergences that don't show up elsewhere. And it works down to lower time frames as well. Down to certainly down to the 2 hour. Probably down to the 1 hour. You start getting lower than that, it's gets more even noisier and less meaningful, I suppose. There's your plunge in full, folks. There's the levels I had marked, and I did actually go short right from in here. I think I was short the close on Friday. Where's Friday, Wednesday, Thursday? No, last week, dumb shit. Was I? Oh, I can't remember. But anyway, in any case, an MC4, I went short here, and I closed out somewhere underneath this wick, I think. I made a very good profit, albeit for my small account. So you can see we've come into this whole business here. Highs, lows, wicks, supply, demand, yeah? And we're finished with a bit of a bounce in precisely that area. I would like to see a bounce. I'd like to see us take out this high here, or at least come up into this whole congestion area here, back to 4600, back to 4625, something like that. And that would be a lovely sell or resell. In the past, big down moves like this have excited the bears, and of course nothing has come to it. But I mean, Are there any bears left alive? I can't find them. They're not showing up in my Twitter feed anymore. Here's the Nasdaq. And again, the Nasdaq, if you recall, it was, I called shorts initially here. I said we sort of spiked above it, but it still looked bad. I was considering maybe the Nasdaq would do its own thing, but I said look at semiconductors, look at the S&P, look at the breadth and internals, and bingo bango, we've plummeted through, back tested, plummeted down again. The only issue is, with us being again in this lows and this congestion area here, is this now going to be a launch pad for higher? Are we going to see a bounce and drop, or are we just going to gap down horrendously on Monday and frighten the pants off of everyone? Again, it's all about going down to those lower time frames for me now, and looking for shorts if I can afford to take any out. Because guess what's using up all my margin? That's right, silver and gold. I'm long silver. I'm long gold. I was already eagerly getting long, thinking this was a flag. Coming into sort of the top of this neckline, the bottom of this neckline, this whole sort of area here, we got this little spikeroo. I got very excited. It dumped the fuck out on me. I was buying everything under here, and just a mess. Anyway, so I finally, I just as silver was reaching underneath this wick, was when I sold my specs positions, my spec shorts, and instead I've got long under this wick in silver. There's not really much to say on this time frame anyway. Let's go down to the 4. So here we are on the 4. And you can see really it's all about the top of this section here. It's all about these wick lows. That green line is something or other on the daily. And does this count as positive divergence, or is it negative reversal? Possibly again here on my modified ease of movement indicator. What if I change this to be bit like the trendo, this green-red trendo moving average that I only really like on the daily. If I could have this yellow one and this trendo indicator only show up on the daily time frame, I'd be very happy with that, but I can't work out how to do it. So instead they show up on every time frame, and it's just annoying. Yeah, that's pretty massively unhelpful. Alright, let's put that back to being the simple 50. Come on, there we go. So on one level, it still looks a bit shit, but what we're going for here now is this is the deeper right shoulder. Because look, we had sort of 1, 2 left shoulders, so now we've got to have 1, 2 right shoulders if and this is sort of the dying gasp of this formation. I really hope we don't do this and have a mirror image on this side and go down to like 22.25. I really hope. I would buy that, but for the love of, do we have to? If this thing's really going to have a huge reversal and go to fucking $40 an ounce, $50 an ounce, my patience is showing. I don't get upset like this with other assets. Only silver. It's hurt me so much. I've been abused. And I feel entitled to some easy times and good times, to be honest. But of course, you're entitled to nothing other than a slap around your face. And the slapping never stops around here. We've got rosy red cheeks from being slapped. Silver is a cruel thing. Cold and cruel. So anyway, I'm long that. Where's gold? Yeah, just because the extremeness of the reset we've got on this indicator, we came back into the launchpad zone for this move. So we put the point of origin, we'll be jiggering around. Look at this action yesterday. And I think, where am I long from? Yeah, and I actually got long on this breakout of this yellow line here. So I'm long from 1790 or thereabouts. Which isn't ideal, you'd rather be long from down here, under this wick. But, there you go. And gold's been holding up better than silver. I mean, this would be like the equivalent head, the equivalent left shoulder, the equivalent right shoulder. I mean, look how much higher the head was, look how much higher the right shoulder was. We've already broken out above here, and we've come back into this thicket, this pivot here. 1790, that's an important level. Let's put a line in there for that. Let's put a line in. Let's put a zone in. Let's say that's the zone. So that's where I stand. Part of me thinks I should have stayed short the S&P, but that's one heck of a move. It's normal to get. I mean, it may just keep on dropping. Like, we may wake up and we're down at 43.50 or something stupid. But the shorts I made from here made me a quarter of my account size back in profit. That's not to be sniffed at, and that's happened so many times before. Where proportionate to the amount of money in my account, I'll be up 25-30%. Or increase my account size by a third in one fell swoop, and I'm like, I should hold this. Let your winners run. Let your winners run, and then it just comes right back and eats away at what was a pretty decent chunk. And then you think, well, no, I should have just been grateful and taken it, relative to my account size on that basis. So yeah, the euro. So the euro came into, that's a very big, important monthly 50% fib retracement line on the daily. Yep, that's between the 61 and the 70. It's the golden zone. Golden fucking nuggets. In the golden zone. Yeah, we were bobbing along. Boop, boop, boop. Retesting the lows, retesting the lows, retesting the lows. Whoops, fell through. Test from one's side, and then kablamo. And we're back into, this is also, you can see it's almost like a pivot level. And we just got, look, on the ease of, my modified ease of movement, look at that. Super tight, mini bullish divergence. And if this was a faster RSI, you'd see the same thing here. So the important thing basically is the euro stays above 1 1.226. So $1, I guess, and 12 cents, and 6 or whatever. 26. So there's an element where this is probably just mean reversion, extreme plunging move. It's gonna bounce at some point. So you can see in terms of the colour coding, this has been a short the whole time. You go short, bounce, short. So let's look at our counterpart, the dollar index. Well, on the daily, we've come up into this congestion area here. We've put in a little divergence, negative divergence here on the fast RSI. The issue is now is can we hold under levels like 96.14, which was an important pivot thing back here. Because we've come into it. If we're going to go under it, we need to start getting under it, we need to start staying under it. We don't see a movement, too much of a movement back. You know, maybe a bit of a retrace, maybe up to here. 96.38, 96.40. But you don't want to go much higher than that, otherwise that bodes for higher. And that's not going to be good for if you're long euro. That's not going to be good if you're, like I am, long metals. If we look at bonds, look at that. I mean, wow. So this time the positive, the divergence is from here, and also look from here. I feel like I need to change the colour of this. Black. Do black. Let's do black. Bonds, terrific day for bonds. And again, bonds going up implies rates collapsing. And we're above, look, this was the key pivot here, this was the triangle, this was the midpoint of the triangle, the pivot, there was a low, there was the doji, there was the high, there was the high, there was the resistance, that it gapped up above, that it plunged down below, that it retested from underneath 2 times, that it went down below, that it nearly gapped up above. If we zoom out, this could be the start of something. There's a lot of open air. Maybe back up to the top here somewhere. There's lots of open air there. And that was a strong move. Semiconductors. Yep, who was calling it? That's right, I was calling it. Yeah, this wedge. We broke apart the wedge. We hit this important line that I put on for some reason on the weekly. Can I understand why I've done that? Maybe if I look on the monthly. So I've got no idea where that line's come from, but I've put it on there for a reason. You know, I bet this was, I bet I was doing some fib analysis or something and took the actual fibs off because, you know, they clog up the chart, and just thought, well, I'll put one line on to remind myself that's an important level. This will be here for a reason. I can't quite tell what the reason is or remember what the reason was, but I mean, look, it's definitely serving a purpose. So anyway, there was the divergence coming in, yeah, rolling over price volume trend, and we've come back inside. And again, so as long as we're staying under this level, so 3660, 30,660 that is, as long as this continues to look shit, as long as Nasdaq continues to look shit, as long as breadth and internals continue to look shit, you can say, well, they look shit. That's when you buy. That's the ideal buying opportunity. All these indicators are going to new lows. Quick, buy. And you know, because that's been the thing that's been working. But I think keep it simple. It looks shit because it is shit. I was saying that last week. The reason it looks shit is because it is shit. Bounce or no bounce, I would be sell biased. Real estate, oof. Look at that horrendous congestion, then up, down. We're going to wreck you, ha ha, nothing's going on. We're going to wreck you, ha ha, nothing's going on. Whoops, whoops, double wrecked. What's happening in the world of Bitcoin? And do I care? I'm not sure I do. See what I mean? It's all over the place. Absolutely all over the fucking place. Who can make sense of it? I'm not sure this works too well on Bitcoin, to be honest. I might take us off. Let's go with good old RSI and its derivative indicator. Yeah. It needs to overcome the underside of this and the underside of this trend line. Because if it can't, and also this one here, this weekly line, as long as we're underneath all this business, you know, sure enough on the hourly we're having a bounce or whatever, but yeah. Especially the closer we get to these things, the closer we come into these lows, the closer we come to this, the closer we come to this, the more I would want to short that. Uranium, uranium, uranium. Let's have a look. So it's not blasted off, leaving everyone behind to its historic highs of, look at this, 15,000. Is this an ounce? Is this for an ounce of uranium? Well, it's not for an. It's just, this is an ETF, isn't it? It's not for a measure of the stuff. Let's try our new wacky ease of movement setup on here and see what happens. So make it invisible. Add indicator. Let's go to the 5. Let's make it yellow. Let's make it a bit easier to see by making it a bit thicker. So we have the negative divergences on the momentum, on the derivative of the momentum, and on the ease of movement gimmick. Yes, we have the positive divergence on the momentum. Not so much on the ease of movement, but if you went all the way back here, but that's kind of pushing it. See what I mean? It's just like, you can read too much into it. There was your fall off, look, before we hit this high here. Is that like a negative reversal here? Yeah. From here to here. From here to here. Oh, I don't know, maybe I'm reading too much into it. Oh, that's composite price volume trend. Let's get rid of that. So where would be interesting on here? Well, if we climbed back above that level, that would be, again, I'll go on the lower time frames, start looking for anything that's look like it's going to come above and stay above this level, and that be a buy. There's the old high. There's this whole business here. We could retest here, or just spike again, come under us a little bit, and then There's all these gaps here, I suppose. Look, gap, 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 gap. Where do the gaps finish? Ooh, we've just about got that one. So the first gap is about here. That's a mini gap. We've got this gap here. What's that? Line on the monthly. Box on the monthly. Let's take a look. Oh, I see. Okay, well, let's get rid of that. Yeah, let's get rid of that. It served its purpose, I feel. Same with this stuff down here. Same with this stuff down here. Same with this stuff down here. Good luck, we've come with this whole congestion. This whole congestion thing here. Falling momentum. There's the bearish divergence on my ease of movement indicator. 1, 2, 3, 4, 5. The daily's just ticked over to a sell on the trend indicator. Again, rather. Is it worth looking sub daily? Yeah, so as it gets under that wick, maybe that's the buy. Yeah, I guess that's the trade for now. The dollar yen shot the bed quite impressively. Look at that move. Taking out this, taking out this, taking out this, taking out this. Did they just do it? Ooh, I want to see. I want to see. Yep, looks like they just did it. Doesn't look good. Yen strengthening, risk on. And then we tapped out all these wicks, we've come down back into here, we've had a bounce. And again, maybe that's it. And maybe this will lead the indexes down, take the indexes down with it. GBP, JPY. Yeah, it took a licking. It took a kicking. The pound had a good year really against the yen. But is a pound really worth 1.5 of them? You know, come into this box, it came deep, and this is the little bouncery we've had so far. So maybe we need to come down here. Maybe we need to come down to 1489 something for. FTSE. Oof! Brutal. All the effort we put into chugga 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 breakout. Whoop! Chugga 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 breakout. Whoop! Chugga 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 breakout. Whoop! Oh, we're finally doing it, boys. We're finally. Oh no! Boing. Ah! So this is the story of market emotions. You might think telling a silly little story like that is, well, it's mostly for my own amusement, but, you know, that's emotionally, that's what I feel is going on. I mean, look at this fucking level. Look how hard. Look, it was this low here. It was the accumulation for the chugga chugga chugga, chop chop chop. It was the accumulation for the, we've done it, boys. Whoops, boing. Same gimmick. Same kind of gimmick. It's that fractalness, the fractal nature of price action. All of this slog and efforts and week after week of going nowhere, and you keep getting chopped out and getting out and in, and finally, and fuck! I mean, wow. How many... So the high was 7,295, the low was 6,995. Wow, that's a brutal 300 points drop. Yeah, wow, 4% drop in a day. 4-5% drop in a day. And all our hopes were dashed. All our hopes. What were we saying? Oh, we might even get to 7,500, 7,800 by the end of the year. Tap, tap, schmack. Tap, tap, smack. I hate the FTSE so much. And I don't even trade it. Let's see how the pound's doing against the dollar. It's been holding up a little bit better than the euro, I suppose. We're at the bottom of the flag, we're putting in divergences. And like if the euro's going to go up, if the pound's going to go up, if bonds are going up, if the dollar yen is falling, dollar is falling, indexes are falling. You know, surely my gold and silver trades can also do the right thing and go up. Surely they can do that for me. So we've covered. Oh yeah, let's look at. Here we go. So silver versus the S&P. Not looking great considering what a shit time the S&P was having on this day. Silver could have done a bit better, but silver was putting in new lows on this day, but the ratio improved slightly. So silver versus bonds. Bonds went fucking mental. This was a negative divergence here, of course, against bonds. So, well, silver can go up even if it continues to underperform, but it's not exactly looking good for light. You know, this is meant to be it's the commodities bull market of the century. Well, it looks more like the bonds bull market of the century than anything else. Silver versus the dollar. Again, this is just exactly the same as well, not quite the same. It's got that similar look than the actual silver chart itself. We've put in the right shoulder on the ratio chart is as deep as this spike low here. In price, we're nowhere near. Here was the spike low in price for the left shoulder. Here's where the right shoulder is. It's holding above here, above like this mini inverted head shoulders. So on the ratio chart, we've gone there. So maybe that's sufficient, or maybe that's a sign of doom. Silver against commodities in general. Big up day. Again, it's the potential in the thing. When you see what oil's done and uranium's done, I mean, for the love of, is it not silver's time? This is why I keep going back to it, because I think, well, surely the potential is there. It isn't total madness. It's not just some sort of weird hallucination in the desert that there is an oasis of silver just over the horizon that will, sustain us and revitalise us. It's surely the potential is there. And the whole point is you get in assets where you think they have the most upside potential. I keep going back to the fucking thing. I keep burning my fingers. Will I have any fingers left is the question. Anyway, let's see what the week brings.